Hello and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Correy Faciane, founder of the Scope Fund, a Washington, D.C.-based venture capital firm that invests in entrepreneurs with a sense of purpose. Today, Correy will share his outlook for investing in this space, including the greatest opportunities and challenges. He will also share how he thinks about long-term value creation when evaluating early-stage investments. Before we dive into the conversation with Correy, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts, and you can also find us on YouTube at EisnerAmper. Hi, Correy. Thank you so much for being with me today.
Thanks so much for having me. I'm excited for the conversation.
Absolutely, Correy. So to kick off the conversation, tell us a little about yourself and how you got to where you are today.
Yeah, so I am originally from Jackson, Mississippi. But now I live in the Washington, D.C. area. My story is a little non-linear into venture, but a few years ago I was actually in medical school, so I have a healthcare background. I got the itch to want to start building. I actually started a platform while I was in school that really had to do with impact and matching all these smart people that are around me to volunteer opportunities and funding opportunities for local nonprofit organizations. I never ended up raising capital for that, but that is what introduced me to the venture space. And so instead of that, really, I ended up turning that into a foundation and getting hired in venture as I was getting poached by investors and things like that. I started working for a family office, and from there, my network grew, and kind of the rest was history. So recently broke off from that family office and launched a syndicate full of family offices that does some early stage investing across all different industries.
Great, Correy. That segues into the follow-up question I have for you. Given your focus on venture investing in entrepreneurs with purpose, I would love to hear your high-level outlook for the space.
Yeah, I'm really ambitious on the space right now. I think venture, especially early stage venture, is really, really interesting because of how Scope Venture Partners does it with family offices and other athletes and things like that. I do think that value creation at the early stage is kind of often overlooked. A lot of these folks either have had successful exits or built massive companies over time. And so for them to kind of be on the ground level with these early stage entrepreneurs, being able to answer questions, do things like that, is a really interesting value add. Not only that Scope Venture Partners has, but I think family offices are open now to doing earlier stage investing because they realize how unique of an opportunity this is. And so I'm really, I think the outlook, looks very good for the venture space, and I'm really excited about it.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience providing accounting and advisory services. EisnerAmper. Let's get you ready.
And Correy, as a follow-up, what are some of the specific opportunities you see in your space and why?
So right now, what we're really interested in, I would say, is definitely from the foundation side of stuff, more of platforms that people can build businesses off of, I think are really interesting. One of the biggest things I would say too is that value creation coming from making other businesses money and allowing consumers to start companies that then are able to provide them, different freedom from, their normal 9-to-5 jobs, things like that, I think is where real value is created. And that's what we're excited to be backing right now is the ones that are creating businesses for other folks to make money.
Correy, on the other hand, what are some of the greatest challenges you face in your space and why?
Yeah, some of the biggest challenges that we often talk about is because the barrier to entry is so low right now for people to create companies, everyone's doing it, right? So just being able to kind of pick the winners in this space is going to be very tough because there's just so many of them. However, though, I do think by the way that we are able to do these diligence on companies and, speak to some really amazing folks that have been doing this for a while, it's worked out for us so far, picking some great companies from the ground up. But I would say that's probably the biggest challenge right now, and just staying away from, speed is everything in this industry. And so the ones that can move the quickest, there's no real moats nowadays, right? Because everyone could do it. So we really have to diligence, probably far more than what an entrepreneur would like to see. But we, at this point in time in investing, that's kind of what you have to do.
Correy, I know you touched upon this earlier about long-term value creation. How do you weigh that into early stage investing?
Yeah, I think that's a really interesting question that I love. The biggest thing that I would say too is that it has to kind of be this balance between scrappiness at the early stage, but also like a long-term goal. And so what I've really seen is the entrepreneurs that are willing to kind of go beyond what all rules and typical business has shown us over the last couple of years, because things are totally different, are the ones that are really able to win and create that value. I've seen, things like opt-out contracts just to make sure that you're kind of landing and expanding, anything to kind of get you in the door and be as scrappy as possible, which doesn't necessarily look like scaling from the ground up, but in the long term, it's going to create that value. Another thing I don't think people talk about enough is the post-sales cycle of things. If you have that support, like that customer support that allows your customers to feel like you're with them every step of the way and building alongside them, I do think that they're more likely to continue to re-sign contracts. And they kind of have a piece in building whatever product that you're doing. And so that's really important, as well as like not going by the traditional rules that maybe all these big corporations have taught us over the past few years.
Correy, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
Yeah, just kind of going back to the point that I alluded before in terms of like getting in venture right now is probably the best thing. If you think about it, I think, the current GDP is about $100 trillion, right? If you think about over the next decade, let's say that increases, this is just a conservative number, to 125 trillion, right? If 15% of technology makes up the GDP now, I think that number goes up to about 20 or so percent. That's $15 trillion more that's out there for these technology companies to build in. And so I would suggest people don't be on the sidelines watching, definitely hop in the game. And I'm really excited to democratize that access to high upside deals for folks that are interested. But I'm just excited to be here, and thanks so much for the conversation.
Well, Correy, I want to thank you so much for sharing your perspective with our listeners.
Thank you so much for having me.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.